Hi, this is Jerry Broussard with CajunMoney.com, and welcome to this month's edition of The Big Picture. In this month's video, we'll be discussing the month of February. It just ended because it's a short month, so the video will be a little bit shorter, only because the market is continuing pretty much its stage of moving higher without much really volatility in it. And we've talked about that over the last few months. In the chart, you'll see how steady it was for this month. So as you see on the screen here, we have most of the major indexes that I do follow, and most of them you can tell are pretty steadily about higher, about the same amount. It was kind of a rebound from the previous month where we had a nice drop. It wasn't huge, it was just about a 4% drop, and we recovered most of that just in the month of February in a short amount of time. As you can see here, we have the different indexes. The S&P 500 in the red box up 4.29, the Dow Jones up 4.48, Russell 2000, which is small company stocks, 3.62, and the Vanguard All World, this is the rest of the world without the United States, up 4.16. The rest of the world is kind of starting to catch up a little bit. And the fifth box is a moderate allocation proxy that I use to kind of give you an idea of what roughly about half stocks, half bond would have done for the month. So it had been up about 1%. And the last box is the bond market. It was down about 0.5%. It finally pulled back. It's really been steadily going up because of some of the sideways move in the market over the last 6 months or so. And so it had a little rest for this month. It actually pulled back. One thing I wanted you to take away from this chart is you can see how most of the boxes are pretty evenly up about the same amount, again, except for the moderate allocation. The rest of the boxes most of the indexes are up kind of even. I like to see that. That tells me there's a lot of strength in the market, and I think it's showing that we're going to probably have some more upside to come just because of that. The next couple of charts, I'll show you a new chart. My last chart is something that I really haven't shown in any of the videos, but it is something I follow in the back of my head often, just to give you an idea of what the market's doing. So you'll see that in just a second. Our second chart is a view of the point and figure chart of the S&P 500. I've shown this often as well. And we had a pullback in January, and it kind of bounced from support, which was the last high, and turned and reversed, and we are currently at all-time highs. So this chart really hasn't changed very much. It's still marching on upward, which we like to see. Not sure when it's going to stall or turn down, but until that happens, we will enjoy the ride. The next chart is a new chart, as I mentioned earlier in the video, and this is what I call a RWB. It's a red, white, and blue. This chart is a little unusual in that it is a reflection of the moving averages. And what a moving average is that you take a certain, depending on what it is, so if it's a 3-week moving average, you take the last 3 weeks, you divide by 3, you add them up, whatever the closing price was, you divide by 3, and you plot that number. And so these lines represent, on the left-hand side, you can see at the top, the 3-week moving average, 5, 8, 10, 12, 15, that's the red. And then we have the 30-week, 35-week, 40, 45-week, and 50-week. So you can see it progressively gets higher. And what this does, it's a reflection, give you an idea of what's going on with the market. The black dotted line is the S&P 500 itself, and the red lines are the shorter moving averages, and the blue line are the longer moving averages. So when we have the red on top of white, on top of blue, red, white, and blue, it basically tells us the market is very strong, and it's going from the bottom left to the top right. So as you can see, the black dotted line, you have a little bit of zigzag going on, but if you kind of stand back, again, a big picture look, you can see that the market is pretty nicely moving up to the top right. Even with the dip here where I have the cursor in October, many thought that it was going to be a beginning of a downturn, and it doesn't even show up very much on this type of chart. And in January was somewhat of a blip as well when we recovered. So as you can see, over a 2-year period, looking at the bottom, it gives you the months and the years. So you can see it's a nice steady move up and to the right. So with that being said, I'll end this video. It'll be fairly short this month. Just a continuation of what we've been seeing. We did have a steady sideways move, I guess, from the end of the summer all the way into December, beginning of January, and we finally broke out of that. And so that makes the market much stronger just because of it recovering and moving on, and I believe we will see a continuation of that. As always, if anything comes up that changes that, I will be quick to post. And if you enjoyed what you see here, please share it using the sharing buttons you see below. Thanks for joining us today. Have a good week.